Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Friday, May 23rd, before the long holiday weekend with Memorial Day on Monday. So the next stream that I will be doing will be overnight market prep. That's going to be Monday evening, but let me know if you want me to do a ticker request live on Sunday. Let me know either in the chat or in the comments down below. And also, I have to note that, let's see, the time on the thumbnail has been incorrect for these pre-market preps. I realized it yesterday. 7:15 for me, but it is 8:15 on the East Coast time. So those overnight market preps will be at 10 p.m. Eastern, and the pre-market preps will be at 8:15 a.m. Eastern. And yeah, some exciting stuff going on in the markets with some tariff news on the EU, 50%, I believe, announced by Trump, and also some news regarding Apple and those iPhones not being made in the US. If they are made in India, they will be tariffed by 50%. So we're seeing some volatility in the markets after kind of an exciting day yesterday. I'm really looking forward to going over GameStop and AMC. Also, I did have on here ChargePoint, but before going over those basically in the reverse order that I just mentioned them, I will also be talking about the uranium ETF as well as Oklo because we have seen some exciting news in overnight trading with those. But first, beginning with the UVIX, which is the 2x long VIX futures ETF, which closed yesterday at a price of $31.26, being down 1.26% on the day. But we are seeing it rally in the pre-market on that tariff news, so always good to have a hedge in the market for when we do see some volatility spike. And so personally, I like the UVIX, and we are now trading in the pre-market right around $36, which does correspond approximately with this downtrending light blue line here, which I've talked about a number of times on the channel. It is the top of this parallel channel based on the highs that were hit here on September 6th, as well as the highs from December 19th. Those were the tops following this big move up, topping out on August 5th. And then again, most recently, we did have another big move to the upside, and we hit that high with the UVIX on April 8th. Now back into that parallel channel, but testing the underside of it, currently the underside of the top of that channel, the underside of that downtrend there. And so if we do look over at the 10-minute time frame, we can see that in the pre-market, we hit a high of $36.75. So going above 36, nearly getting to that gap fill up there at 38.12. I wonder if we're going to be hitting it. And I believe 20% for myself, my average is right around I think it's just below 33. I don't know exactly, but 20% for me is around 39. So we'll see if that gets hit today. Maybe I start to trim a little bit before the weekend, but I do think that it would be good to, just hold, as always, a small position just to hedge a little bit. And what we can see a couple days ago when I did the pre-market prep, and so actually, let's see. No, that was yesterday, I guess. I thought, time is always a blur. But yeah, so yesterday we did have, hitting high of 3360 during the pre-market. I thought I had already covered this yesterday, but apparently this happened yesterday, so I haven't covered it. It did dip back below my average, and so I was thinking, man, it kind of sucks. I could have taken some profit or at least some risk off the table, but I did not. And it's a good thing that I didn't because, I had that hedge there for a reason. Now at 36.74. Let's see, do we 75? And are we going to be going up? Yep, we did put in a new high in the pre-market there. So that's pretty exciting. Yep, good to be hedged. And then just looking back over at the daily, as you can see, that's where the gap comes from at 38.12. That was the closing price on May 9th. So yeah, pretty exciting to be holding this. I'm very curious to see if it hits around 39. Maybe we go up to 44. I am not sure. That is going to be based on the low from April 9th. And we did have some consolidation below there. So I think that range could be acting as some resistance. But then we can also look over at the VIX, which is the market volatility index, which closed yesterday at a price of $20.28, being down 2.83% on the day, and just comparing that with the UVIX, which was down only 1.26%. So, a little bit less of a downside here. And still above 36.75, 36.77 in the pre-market with the UVIX. With the VIX, I don't have the pre-market data up here, but what we can see is very interesting. That gap was filled. So I'm just going to make that dashed line solid there. And that is, of course, based on the closing price from May 9th, which was at $21.90. And so we did hit a high yesterday of 22.07, as we can see a pierce of that gap level there. So that gap has been filled, but I suspect we will be continuing higher. And also I should note that yesterday on 2 days ago on Wednesday, we did have a close at 20.87. And then with yesterday being a pullback day, still above 20. And really that is the alert level that I have here. Once the price of the VIX goes above 20, we could be looking for some volatility to the upside, and that is exactly what we are seeing. Where could I see this taken off to today? I think 22.88, which is, let's see, what is that based on? That is this Fibonacci retracement here. That is the 786, but we've actually broken below that. So that's not really to be serving as a resistance level to the upside, but more a support level on the downside. Since we have broken below that already, I am just going to delete that retracement. And I might do the same thing over here, but actually I don't have a retracement there because it didn't really make sense for acting as resistance. But we do have this orange line here at 23.76, or right around $24. And that does correspond with the high from September 6th over here, which was some notable resistance. Did get a couple fake out breaks above it before we launched above it. And so that could be acting as resistance again, just like it was over here. So look for that. But what I feel like, since we are seeing the UVIX spiking up now 18% in the pre-market, I do think that the VIX could be taken off to around 28, maybe getting rejected here to form what could be a little bit of, kind of an ugly head and shoulders pattern here. So look for 28. I do have this going up, the doodle going up to around 32, but I'd say 28 is perhaps a good target for the VIX today. But then looking back over at the UVIX, which is pulling back a little bit now below 18%. I just kind of wanted to look at the volume here because we did have this wide or this increase in volume here with a widespread candle there. That did make sense. And we do see a little bit of a pullback in volume with the let's see, the spread of the candle being a little bit smaller. So that also does make sense. Whatever is happening here, we are going to be seeing this launch higher. So not too surprising there. But then if we do flip over to the SPY, which is the S&P 500 tracking ETF, which closed at a price of $583.09 yesterday. We are in the pre-market down about $8.5, a little over $8.5, or down 1.5% there, trading around 575. Where will this be pulling back to? I've talked about 570. If I did say 470, I meant 570. And so, or 575. But yeah, I have talked about 570, 568, the levels here. Maybe we get a gap fill down here to 564. So none of this is surprising here on the SPY. Let's just real quick look over at the 10-minute time frame to see that this has broken below my doodle, which is not necessarily significant, hitting a low in the pre-market of 573.28. We will see if that does continue lower down to right around 575 to fill that gap there. Actually, that gap is at 564.34. So a little bit lower than 575. And then now flipping over to the SPX, which is the S&P 500 tracking ETF. Not tracking ETF, the index, the S&P 500 index, the SPX. This closed yesterday at $5,842. Got a nice 420 in there and 1 cent, down about 0.04% on the day. I'm wondering if we are going to dip down to find some support right around $5,700, or maybe filling the gap over here, which is at a price of exactly $5,659.91, corresponding with the close from May 9th over here. But we also do have another gap, or actually 2 gaps below it, but the next one down is around $5,569.09, and that gap is also corresponding with this orange trend line, which goes back to the lows from April 19th over here, and then the other pivot point is going to be that low from August 5th. A significant uptrend, trending level of support in my view, because August 5th, definitely very important. I forget what happened on April 19th, but clearly that seems like it was a pretty pivotal level in the market. We did break below it over here, as you can see, corresponding with Liberation Day, and with tariff news now, we're getting some more liberation news, and so I would not be surprised with a pullback to around $5,600 to $5,500. So do look for that. And with the pullbacks in the S&P 500 in the stock market over here, we're also seeing a pullback in Bitcoin, and so it's currently trading around $108,000, just above, and that does correspond with this red line here, which is, let's see, the Fibonacci extension, the 100% from the extension over here. So that was a level that I expected us to be kind of consolidating below, based on, this yellow box that I've drawn here. We actually consolidated below that yellow box for a good amount of time, but I did expect after about a 2-week period of consolidation that we would be breaking higher. And so what we're seeing now, you can be panicking, you can be freaking out. I think that this is a dip buying opportunity, and really a technical retrace to test the top side of that. We will see where we close the day. If we are finding support around 108, I think that's just a really good retrace, a retest before bouncing to higher levels. So I think this is all good. And I think that if this even goes down to as low as, 100,000, maybe even a little bit lower, I don't think that's a bad thing. If your thesis is that Bitcoin is going to be going up over the long term, being below 110 is an opportunity. It's not, a crack in the system or anything. So yeah, I think that this is just further great opportunities to buy Bitcoin at a discount. A year from now, 2 years, 10 years from now, we will be looking back and thinking, man, I wish I would have bought the dip. And we are getting one right now, even if this goes to 100,000 or lower. Long term, this is an opportunity. So good to think about it like that. And I will be following up with Bitcoin tomorrow during the Crypto Corner Sat Stacker on Saturdays, always doing that. And then I will also be following up on Ethereum, which is also taking a nice dip, currently trading right around $2,500, whereas it was just a few hours ago, really was above $2,700. And this is pulling back about 6.5%, whereas Bitcoin is pulling back around 2.5%. So a bigger pullback in the altcoins, in Ethereum. But yeah, this is a dip buying opportunity, still trading in this range that I've highlighted for Ethereum. Got a number of other levels here. I should probably clean up the chart, and I was actually thinking about doing that, but I have not just done that yet. But yeah, I think that Ethereum is going to be possibly at 8,000 later this year. That is my thesis, which I go over in Crypto Corner Sat Stacker. So yeah, I mean, I think that this is all just a dip buying opportunity, so nothing bad there. And what I might, adjust with this, actually, let's see, maybe this yellow one. No, I think that those are all kind of, good levels for me to have up there. This one over here, though, I could probably clean that up because we're not back down there. And I might also do the same thing a little bit with, Bitcoin. So we're not down here. Delete that. And so we do have these levels to be paying attention to. Yeah, I mean, if this came down to like 97,000, which I don't think will happen, that was basically the consolidation highs over here. Got this overlap in those two candles, wick up to there. If this came back to 97,000, I think that'd be a dip buying opportunity, but I think people would probably draw this line on the chart just like I have, and they'd say, oh, well, I'm going to wait for 97,000 or maybe 98,000, considering that this did not get quite to 97,000. But yeah, I mean, I don't think that the prior highs will necessarily be tested. So good to have a plan if that does not happen. But then, moving on to the next ticker on the list, that is going to be ticker symbol URA, which is the Global X Uranium ETF. And this closed yesterday at 28.52, up 1% on the day, hanging out above $28. So, while I thought that'd be resistance, it does seem like it's been consolidating there as support. And even with the kind of, panic that we're seeing with that tariff news, we are seeing uranium still above 30. And let's actually look at this so we can see some of the perhaps overnight trading. Do we have that data over here? In the pre-market, we saw this go up to a high of 31.24, but then pulling back to around 30. We'll see if that holds as support. But really, I didn't necessarily want to follow up on URA because it has been, kind of respecting that $28 level. I'm very curious to see it. Actually, it hit 30, and, basically this doodle that I have up here has played out without this dip down. I think that's going to be some notable resistance as we do have that gap up there at 30.53. So do look for that, a rejection around there. And we are starting to see a little bit of a pullback in the uranium and or nuclear sector. And we can especially see that with Oklo. So this is one that, I believe I bought some up here, averaged down a little bit down here, and then I was trimming on the way up with a stop loss at 28. I have one share left, so a really small position, but that's one where it's just like, no emotions. I can just hang on, hold on tight for the ride. Maybe I'll move my stop loss up as time goes on. But anyways, with Oklo, we can see that it closed yesterday at 39.72, up nearly 8% on the day. And then in the pre-market, we're up nearly 10%, being around or above, I should say, $43 a share. But actually, it was a lot higher. And there's actually a very interesting level that I wanted to point out, really corresponding with this dip over here to right around 47.83, 48, somewhere around there. So on this day, on February 12th, Oklo hit a high of 55.33, but pulled back to a low of 47.49 with an open at 47.78. So that seemed like, that was basically some support. There was, here, if I'll just zoom in here to kind of doodle it out for you, after hitting this high up here, there was effectively a pullback on that day, the 12th, and then a bounce up over here. So that level right here acted as support. So I was wondering, let's just go with the open from that day, so 47.78. I was wondering if that might be acting as some resistance. I'll color it orange, so it's not necessarily, super solid resistance. Red would be, that is the kind of high risk level. And so I was curious to see if that might be or might have acted as some resistance. So let's flip over to the 10-minute time frame. Oh my gosh, look at that. I did not draw that up before this. I did notice though that it seemed like it was trading around 47 yesterday. So I was thinking, hey, maybe that's going to be acting as resistance. And this is, of course, on the news that nuclear stocks like Oklo, Nanonuclear, Constellation Energy surge in Friday pre-market. So what's going on? Also, this was kind of a fan favorite, I believe, kind of a retail following of Lightbridge. I've covered it a few times. Also, NuScale Oklo stock surge ahead of White House nuclear executive orders. So, potentially a lot of good news and more good news to follow. So, the big question is, did I have a limit sell order at 47.78 or up at 50, which we did not hit in the pre-market? The high was 49.50, and the answer is no. I did not have a limit sell order, and the reason is because, I have a stop loss down here. So basically, I have no or very little risk in losing money on this. I only have one share though, so it's really not that exciting. But I do believe my stop loss is at right around 28. My average is, I believe, 27.83, and that is just, again, one share, so not a big position. And I did previously have a dip buy at 27, but I have since removed that because I'm just gonna, hang on. I think that we could be getting back up to 59, maybe getting into the 60s. And so, yeah, I'm just going to be chilling. It does look like it was an upside move, bull flag consolidation. And even with the tariff news, we're still up 8% after an 8% day. So I'm feeling really good about Oklo, just chilling with my lame position of one share size. But yeah, it's better than nothing. I'm happy about it. There's no emotion there, just having fun, hanging on. Talking about, share size and, managing risk and all that stuff, I wanted to follow up on ChargePoint from yesterday, because I did get a comment on, I believe, yesterday's pre-market preps video. Thank you for, engaging with me on X, sharing your thoughts in the comments. I do appreciate it because I never really know if people get that much out of these pre-market preps. I try to pack in as much as I can, broader market perspectives, managing risk with volatility, crypto, and some of the swings or the stocks that I am either in or was in or maybe thinking about getting in. But from a more swing perspective rather than a long-term perspective. And so the comment was asking, if ChargePoint is at, let's say, $1.50 a month from now, would I regret selling? Because I have shared that I did exit my position right around 70 cents. My average exit was probably a little bit lower than 70 cents. But yeah, would I regret having exited if it basically 2x's from where it's at now? And the very easy answer for that is no. And there are a number of reasons for that. Number one reason I would have to say is I know that there have been people who subscribe and or tune into the channel because of ChargePoint coverage that I've had. And if those people are still holding and ChargePoint is a 2x up from here, I'm super happy for those people. And yeah, so I would just be stoked about that. As far as, me selling at a loss at 70 cents, would I be sad about it being at, $1.50? And again, the answer is no, because I could have sold at a loss at like 51 cents. And then, yeah, I'd be sad because I sold at support and I would have missed out even with it at, around 71 cents right now. Even at that price, at this trend line here, I would have missed out on 30% of, basically a win back of what I had lost. So yeah, I would have been disappointed there. But my thesis was that, I think that this is going to get back to around 70. And so I'd like to take some profit in the cut some losses at 70 because I think that this is pretty risky. And the reason why I think this one is risky is because it seems inevitable that we are going to be seeing a reverse split, and following prior reverse splits, like I've noticed this with Luminar, other ones, there's a sell-off following it. And so I just didn't want to be overexposed, following announcement of a reverse split. Once that reverse split's carried out, then I have fewer shares and I'm just, holding the bag. And really, I should have recognized this previously. I should have recognized this before. Well, I had this orange trend line here. And when we did, bounce from here, that was great. But then when we broke below it and retested, this was a clear signal that, a little doodle there. This is a clear signal that it was going to be going lower. And so what I should have done, what do I regret? I regret not selling at 150 over here because, it's pulled back 50% from there. Just like I'm talking about a 50% or a 2x to the upside, that's a 50% to the downside. And really with all of this, it's opportunity cost. And so the thing that I'm especially, I think I probably, number one, happy for other people if they're making money. Number two, I'm doing this based on, I think it's at resistance. So I'm going to be exiting there. And number three, which is perhaps the most important thing, is really just opportunity cost. This, when it was at 150 here, that was December. So if, when we were last at 150 going over to today, that's, 114 trading days, 167 calendar days. That's opportunity cost. That is time lost in a stock that's just been bleeding. And so if my thesis is that there's going to be a reverse split and this is going to go down lower, I want to get that money out of this so I have it on the side for other plays. And so what I've been doing in my portfolio really over the past past month, I'd say, is I have more cash on the side than I typically do. Even if I'm adding into a position or entering a position, I still leave cash on the side. And I've actually been withdrawing, just a little bit of money from my account each week rather than what I was previously doing was adding in. So if I'm adding in money to my account as stocks bleed, that's not sustainable. I'm not going to be a successful trader if I continue to do that. So what I've instead been doing is recognizing mistakes that I've made, exposing myself to too much risk, putting too much money on things that, I feel like could be going lower. And after Fisker, after Lordstown Motors, which I experienced years ago, after Biora Therapeutics, and just recently with Wolf, which I was not in when it did dip down, I could have participated in a swing around that. I noticed it looks like it might be bouncing yesterday. I didn't do that. Why did I not do that? It's just too much risk, too much of a gamble. If something is about to go bankrupt or have a reverse split and continue to bleed, I don't want to be in it. It's just too much risk for me. And so that's kind of my thesis with ChargePoint. I hope it goes I hope it goes higher for those who are still holding. But, hope is a four-letter word. I think it's, bad if the thesis has too many ifs, if there's a hope included, if there's I think that is just a little risky. And so I'm trying to take the risk off the table. And if I want to be long the EV sector, I don't think that is with stocks like ChargePoint or in the renewable energy sector like Plug. I think that is, with Tesla, I think that, there's bigger money in that. But also, with my bearish thesis here, one thing that has stood out to me with ChargePoint, while there was a lot of volume over here, there's a lot less volume over here. And so that suggests to me that this could be, starting to show some signs of accumulation. But this is also, lower volume as it's attempting to go higher. So maybe not so much. I am trying to get better at, analyzing that volume with the stock price, learning more about Wyckoff. And another thing that I was just reading about yesterday, I can share the book that I've been reading, trying to read a little bit each day. But it has been on, it's a second book in the installment. It's a 3-book series on the Wyckoff. I can share it on the channel if you guys want. So let me know in either the chat or the comments, and I will, kind of go over that book just so you guys are aware. But one thing that I was reading about yesterday was basically when you have accumulation, that is the transfer basically of shares from weak hands to strong hands, or if you have distribution, that is basically the distribution of those shares from, amongst, the weak hands, and then it just breaks lower. And so I feel like a stock like ChargePoint, especially with it being below $1, it really just doesn't have that much data in the options area. And I really like that, not necessarily to trade options, but just to get the information to use options data, as data. And there just isn't that much here with ChargePoint, and that makes me think that it's just more in the weak hands type of play, that it's more likely in distribution, just going lower and lower and lower until, people like me, decide to pull the plug. And then maybe that's where the bottom is. So maybe my shift in thesis is, a bottom indicator. But I think that it would be maybe a bottom indicator if it was at 50. And I'm just saying, throwing my hands up, I can't take it anymore. But I'm doing this at resistance in the 70s. And so I feel good about that. And with that being said, ChargePoint did close yesterday at 73.31, up about 5.5% on the day. But I believe with this tariff news, it is pulling back down about 3%, trading around 71 cents in the pre-market. So yeah, I just kind of view this as some notable resistance. Although this is very cool, I have talked about this. I'll pull it up real quick here, the rising 3 methods. So we can just see here, this is from, let's see, I don't know if you can see it. This is from Investopedia right there. But just looking at that, this is a continuation pattern where you have a big green candle, 3 inside bars, and then, a continuation to the upside to be followed there. And so that's effectively what we have seen with ChargePoint here. But with these big wicks, it does seem like it's kind of a sloppy rising 3 methods. And we did not get a close above, let's see, that high from Wednesday, the 21st, which was at a price of, let's see, the high was 73.9 cents. We hit a high higher than that, 73.95 cents, but we couldn't close above that high. And so that makes me, again, think that, this is just a little bit weaker, a little bit more speculative, a little bit more risky than I would like. So I just wanted to follow up on that to clarify. I hope it goes higher, but I just want to be consolidating my portfolio, managing that risk, doing a better job at managing that risk, and also sharing that with you guys. So hopefully that is helpful, just my perspective, but also to note, I am not a professional trader. I am really not that experienced, but talking about it, on this channel does help me. And, hopefully that perspective helps you guys. This could very well, be at $1.50 a month from now, maybe corresponding with earnings, but maybe there's a capital raise, or maybe there's an announcement of a reverse split if it's not above $1. And since it has been trading below $1 for more than 30 days, I think that they have to basically have a reverse split, unless they can get it to be trading above $1 for 30 consecutive days before August 19th. And if not, then they're not going to be compliant with the New York Stock Exchange. So yeah, I just think overall it's pretty risky, especially in this volatile market. And speaking of volatility, let's talk about AMC real quick. This did close at $3.24 yesterday, up over 10.5% on the day closing. Or hitting a high at $3.27 and closing above $3.18. So this is the level that volatility on X, also known as Talati Tapan, I don't know how to pronounce his name, but also known as volatility. He has talked about needing to see a close in AMC above 324, but maybe we do see a pullback. We can see. This is getting into that volume analysis that I'm learning by diving into Wyckoff analysis, is that we do see this big surge in volume over here corresponding with a surge in price, big green candle there. So that looks pretty nice. But we did get a rejection on that day from 318, hitting a high of 318.5. So that does seem like a little bit of a topping signal, a little bit of a pullback. And following that, we have seen some consolidation. So that is suggesting some strength. But what do we see here with this big surge in volume? A massive green candle there relative to this one. We actually saw lower volume. So that is divergence, showing that, while the price did go up higher, there is not the volume behind that price movement. So that is suggesting that volume, that the number of buyers or the number of shares being bought, it's really I guess really like the number of buyers is really not backing up that move. So it was just a lighter volume move. So we could be seeing a pullback maybe to around $3 where the cursor is. That does seem like this could be acting as support. And on the note of $3, let's check out what max pain is for AMC. We will also look at GameStop real quick. I've got about 9 minutes before the hour. I'll try to open it up for some chat since it's open for you guys to leave your comments there, but I just can't see it right now. But yeah, so max pain for AMC is actually $3 for the coming weeks and months. So yeah, I mean, I think that $3 is going to be a pretty important level. So we could most definitely be seeing a pullback to around $3 even today. Maybe we close below $3, so let's not get ahead of ourselves. But I think it's great to see this kind of movement, because I definitely think we could be seeing some squeezes happening if we're not already seeing it. And so on that note of this potentially pulling back to $3 in the pre-market, if we do look over at the 10-minute time frame, we can see that it's actually finding support at 318. So we'll have to see how price responds to 318 once the market opens. If it's holding that as support, I think that this pullback, this little bit of panic around tariffs, is excellent because we did see this high in the overnight trading of 336, a pullback to retest 318 as support, and a continuation higher to 350 to 4. If that happens today, we could be seeing further gamma squeeze price action. So very excited there. And just to pull up the options data here, not thinking about a specific contract, this is one that I do hold that I have been trimming out on, taking losses to be honest, but just trying to manage that risk. I did have a NEO contract and ChargePoint contract. Both of them go to zero. And so if this contract for AMC does go to zero, I at least want to be taking some cash out even at a loss. So I've just been trimming very casually, very passively. And what we can see yesterday from the net call and put premium for AMC for all contracts, so not the one that I was talking about, which if you didn't notice was the $8 strike call that expires in 28 days. So the monthly expiration June 20th. And so I should note the reason why I've been trimming out on this is because maybe AMC goes up to 8 but doesn't close at 8. And so I think that it's a very risky one, especially with it trading around 321 right now. So good to be managing that risk. But what we see with the changes in the net call and put premium from yesterday is that net put premium went down by about $25,000, effectively being flat. $25,000 is not really that much money as far as options go, especially considering all of the contracts for AMC. So that's net put premium that has gone down by $25,000, whereas net call premium has gone up by about $450,000, just shy of $500,000. So that's a good amount of money, but as far as options go, it's really not that much money. If we look back over the past 30 days, we can see that we have seen some other spikes here. This was on the 16th, I believe. Net call premium ended the day above $500,000. So pretty good there, but it's not in the millions of dollars. And so I would really like to see that with AMC over the past month. Basically, the highs have been right around, let's see, $160,000. So seeing it at $500,000, that is good, but it could be better. It could be more. So just something to think about there. And then while thinking about AMC, let's also talk about GameStop. This had a massive rally towards the end of the day, up 10% on the day, closing at $30.86. So looking really good there, above $30. And there was actually a video that I saw yesterday, a clip of Roaring Kitty from back in the day talking about GameStop, getting to, $30 a share, not even being at $30 a share, but that was not on any news. And so is there any news that might be coming out regarding GameStop? And yeah, there is some potential news about them having bought Bitcoin. If they bought it before, that's great. If they haven't, Bitcoin's dipping right now. So, any accumulation of Bitcoin, I think, would be great news for GameStop. Could be sending this a lot higher. And I did see on X that the Bitcoin therapist was talking about a couple weeks from now, maybe GameStop announces that, which perhaps corresponds with their earnings. So we will have to see. But yeah, it did hit a high yesterday of $31 a share. pulling back a little bit in the pre-market by about 1.6%. So do we see a continuation to the upside? If we do look at the volume that we've seen here, this volume from yesterday, so on the 22nd was 2145. Over here it was 2061, so 20.61 million. So this is the most volume that we've seen in this time frame. If I do go back a little bit, that's not the case. But looking at it over here, it is. So this is looking really good. And I also wanted to talk about GameStop. I guess, from more of a personal note, I do have a contract. It's the $80 strike call. My average is 70 cents. I have actually been trimming over here at a loss just to be managing that risk because I don't necessarily think GameStop will be at $80 on June 20th. But with this volatility, hit a high or closed, I guess the high yesterday was 64 cents, closed at 64 cents. It'd be nice to at least not lose a ton of money on this. So I'm hoping for an exit at 84 cents. That's 20% for me, but maybe that doesn't happen. Maybe I'll be exiting at a little bit of a loss today. I'm not really sure. Good to be managing that risk with the expiration approaching, which is of June 20th. And so with that being said, I did want to pull up the GameStop data over here, just like we went over with AMC. So the max pain for today, I believe it was at $27 earlier this week. Now it's at $28.80. And the following week, $27.50, then $27, then $24 for June 20th. So I think that, this could definitely be seeing some more gamma ramp type action, which I believe the wolf of my street has been talking about. That's Ryan Riggs on X. And so I think that there's, just a lot of great upside potential with GameStop, with gamma squeezes. But do I think, or I should say gamma ramp, so it's just ramping up as price goes above these max pains. It pushes those max pains higher, and as price continues to go higher, it pushes those max pains higher and, repeats the cycle. That is a gamma ramp. So it's not necessarily a super volatile squeeze, but it's just pushing it up gradually, ramping up. And so we're definitely seeing that. And with the stock price above $28.50, above 30, even in the pre-market pullback that we're seeing, I think that we are going to see some continuation of that price action going higher. But is it going to go to 80? Probably not. I don't think I should expect that. So holding contracts with that expiration or that strike less than a month from now, very, very risky. But then looking over at the contract data over here, this is the GameStop $20 call that expires on June 20th. So this is an in the money call. And this is the one that, Roaring Kitty was, loading up on last year. Maybe he's also in it now. I have no idea. But what we can see, what I wanted to pull up is not specific to this contract, but just the general data over here, net call and put premium. So we can see in red is the net put premium that pulled back by $3.65 million. So, getting into the $1 million, whereas AMC was not. So this is, looking like people are selling their puts, millions of dollars offloading puts. So that's looking really good. But then if we look over at the net call premium, that's up almost $14 million. So $13.76 million increase in net call premium, loading the boat, going along. So just looking really good. And if we do look over the past 30 days, we've been seeing a lot of selling of puts. So while that's not necessarily bullish in the sense that the price is going to be going up, that's really essentially saying that, the bottom is likely in, then just wait. And then when calls start going up, that is when price is going to start going up. And that is what we're seeing. So looking really good there. I'm super excited about it. I'm relieved that I'll probably be able to get out of, my call either, at break even or at a slight loss. So I'm feeling a breath of fresh air with that, feeling really good about it. So just wanted to share. But I will now open up the chat if in case there were any requests. Okay, so chat was disconnected from somebody, or no, I guess it ended up getting disconnected. It got reconnected. Amphadrew is just saying morning. So morning to you. And since there are no requests here, I'm just going to say cheers, have a sip of coffee, and then I'm going to tune into Gareth Soloway's game plan, which I'll actually just pull that up over here in case you guys are curious. This is one that I like to look at every day, just get his perspective, Gareth Soloway's perspective. So this is starting live now. Major trade setups as stocks drop on new Trump tariff threats. Here are the levels. It's usually about a 20-minute video before the market opens, and that's actually why my pre-market preps are so early, so I can tune in to get his perspective. And then for the Wolf of All Streets, I will be tuning into his video with Bitcoin Explodes, although, talking about, other stuff there. And usually does a Friday 5 with his friend NLW. So I think that is going to be a good one to check out. And then, of course, Richard Newton talking about, GameStop. So all of these are ones that I will be checking out, beginning with Gareth Soloway. Then I might be going to Richard Newton first because it's pre-recorded, whereas this one is live. Then I'll wait for that live recording to be over to tune in. So that is Gareth Soloway and or Verified Investing Channel, Wolf of All Streets, which is Scott Melker, and then Richard Newton. Also, every morning I do watch Crypto Rover, so another good one to be checking out there. But then, so Amphadrew is saying, what do I think about ChargePoint recently with their partnership with Eaton on the newest news piece? I know you mentioned you're no longer in it. So really, as far as ChargePoint goes, regarding that news piece, I think it is great, but let's see. Oh, this is the stonks list. I want the ChargePoint list or the pre-market prep list over here. So regarding that news, I do think it's good, but on that news, we're still, contending with this uptrend here. And let's see if it's at 71 cents in the pre-market. I don't know if this will line up if I switch over to the 10-minute time frame. But let's see, are we above or below that trend line? If I do the hourly, we're just hanging out, right around that trend line. So yeah, I think that the good news is good news. But as we're seeing, this is a volatile market. And I just think aside from any amazing news that ChargePoint might see, doesn't matter. It's trading below $1 a share. And that means it's not going to be compliant. And so it has the risk of being delisted. And it needs to regain compliance, meaning trading above $1 a share by August 19th, and that's holding above $1 a share for, I believe, 30 consecutive days, closes above $1 and closing a month above $1. I believe it might be a little bit more strict for the New York Stock Exchange than the NASDAQ, but I'm not exactly sure. But yeah, let's just Google New York Stock Exchange, $1 compliance rule. So let's just look at that. So this is AI generated, and we can just get the whole deal down here. So the New York Stock Exchange requires listed companies to maintain an average closing price of at least $1 per share over a consecutive 30-day trading period. And so just looking at that, has ChargePoint done that? No. And so if we actually go back in time, so from, let's see, I'll start from today, going back in time, 30 trading days. So that's really just let's see, over to here. I should have, it's been more than 30 days trading below $1. So there's an issue there. Failure to meet this requirement can lead to the delisting process. So good to be concerned about that. Companies also have to maintain a closing bid price of at least $1 for a minimum of 10 consecutive business days to remain compliant. Unless NASDAQ extends this period. So maybe that's the same kind of rule for NASDAQ and New York Stock Exchange. They've always seem to be pretty similar. But I thought this also had a rule about 1 month. And so then if we do go over to the ChargePoint, let's see, investor relations page, we can see, clicking on that, if we do get some news over here, clicking on that tab. So this is great news. On the 21st, ChargePoint and Eaton establish industry-first EV charging partnership. So that's great news. On the 15th, ChargePoint to announce first quarter fiscal year 2026 fiscal financial results on June 4th. So that's coming up. So maybe that's a catalyst for it to go up. On April 10th, ChargePoint Innovations transform EV charging with maximum speed bi-directional AC architecture. So that's great. Sounds like there's some innovation there. On March 13th, ChargePoint deploys EV fast charging in New York with support from New York State Energy Research and Development Authority. So that's some great news. On March 4th, ChargePoint reports fourth quarter and full fiscal year 2025 financial results. So all of these things, great news. But then if we go back to February 21st, ChargePoint receives notice of non-compliance with New York Stock Exchange trading share price listing rule, which I just went over, which I believe it needs to close a month above $1. Maybe that's not true, but I believe that is. And 30 consecutive days above $1, which would effectively be, closing a month above $1 as well. And so that was February 21st. So let's look back in time. When was February 21st? So that was, so like we're above here. This is, let's see, $1. We're closing above, let's see, actually, let's see. When did we get our first close below $1? So here on January 22nd, ChargePoint closed at closed at 98.66 cents. And then so from that date, let's go 30 days into the future, 30 trading days. And so that falls on March 6th. And so they got the non-compliance notice on February 21st, so a little bit before then. But, if we look back to when the 21st was, it had not been trading at that point. The past, let's see, the midpoint, the majority of those days. So this was that, so like over here, this is when it was starting to close below, like over here. Oh, so maybe it's calendar days. So let's adjust this to over here. So this is about, plus or minus about 30 days. They got that non-compliance notice. And following getting that notice, have they been trading above $1? No, they've been consolidating well below $1. They've been consolidating below where it's currently at, around 73, 74 cents. And so with this, big picture, taking a step back, downside, getting that notice and consolidating below $1, that's potentially bearish consolidation, although I did note that volume's lower over here versus over here. So maybe that's suggesting some absorption, maybe that this is going to, start to break out. But with that non-compliance notice, and likely, in my view, the coming weeks, perhaps corresponding with earnings, there is going to have to be a vote on a reverse split or an announcement on the reverse split. And with that being said, they have to be above $1 a share. They have to reclaim it and maintain that for 30 days by August 19th. And if they don't, they could be delisted. And then this could be going from 73 cents to 0 cents. So my thesis around ChargePoint has not been about any of these good news articles or just financial updates. They've all been around, this one point here. And we can actually click on that to view it if we want to read this over. I have read it over on the channel before, but basically, from the date in here, so let's see, I'm just going to zoom in a little bit so I can read this to you guys here regarding the $1 stuff. So under the New York Stock Exchange's rules, if the company determines that it will cure the stock price deficiency by taking an action that will require stockholder approval at its next annual meeting of stockholders, so that's, I imagine, going to be coming up, The price condition will be determined cured if the price promptly exceeds $1 per share and the price remains above that level for at least the following 30 trading days. So this is, kind of a big issue, and it has not been resolved with time. So they have to take an action. That's going to be a reverse split. Following the reverse split, there's probably going to be some volatility. Maybe it goes up some, but I suspect it's going to bleed. And I've seen that more recently with Luminar. And so I can pull that up real quick. Ticker symbol LAZR. They had a reverse split going back in time. So a 1-for-15 reverse split on November 21st. So this is post reverse split adjusted stock price on November 21st. What was the stock price there? And this is actually, leading up to that, there was a big move up, but let's just take the price from this red line here, $11.86. What's it trading at now? Sub $4, and very similar to ChargePoint, it's contending with. It is trading around this downtrending level of support. But what do we notice that's a little bit different with Luminar versus ChargePoint? Maybe we could get a little bit of a comparison with Plug as well. So let's just pull up Plug here too. So with ChargePoint, I had mentioned that volume is a little bit lower more recently. So I think that's pretty good. But with that news of reverse split, I think it's probably going to be pulling back. If we look at Luminar, what do we see? Volume has been, more or less elevated. So I actually don't think that's a good thing because price is not launching. It's just hanging out around that downtrend. Plug Power, I believe, similar story. Very similar story. Lots of volume here and price is not going up. That, in my view, is bearish. That is suggesting that price is going to be going lower. So whether it's Plug Power, whether it's Luminar, or whether it's ChargePoint, I think all three of these are very risky. And I personally have removed myself from the equation of ChargePoint as well as Plug Power. I have not yet with Luminar, but I basically sell and or roll covered calls every week. I have 200 shares. And if I get pushed out of my position, that's fine. I'm not going to cry about it. Then that's just cash on the side for me to implement to deploy in other positions that I feel a little bit more confident in. And so, looking at this, look, Plug Power below that downtrending level. ChargePoint potentially breaking above. Luminar contending with. So I just think that all of these are pretty risky. And so I hope that was helpful for you guys with the notes on ChargePoint at the end. But with that being said, I'm going to get ready for the volatile start to the day. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below or in the chat, and make sure you subscribe to the channel for more videos like this. I will potentially be doing Ticker Request Live Sunday evening. If not, I will be doing an overnight market prep Monday evening at 10 p.m. Eastern. So make sure you tune into that. And I will, of course, be doing Crypto Corner Sat Stacker tomorrow. Excited about that. Anyways, take care. Have a great Friday trading and have a great start to your weekend. I hope you have a wonderful Memorial Day weekend, and I'll see you in the next one.